JJ, the CPA here. Hope you're doing well. So this is part 3 of a 3-part video series. The playlist is Learning with JJ, the CPA. I'm glad you joined me today. Thanks for watching. I hope you're a subscriber. So what are we talking about here in this 3 video series? It's meant for small business owners that really want to get a handle on their numbers. So sit tight, hang on, because I guarantee if you haven't seen the other 2, you need to watch them. You don't have to see the first 2 to understand this one, but this one's going to blow your socks off. And if you're a small business owner, then you do want to understand your numbers. The first one is, that first video is, you want to look at cash basis financials. Go check that video out. I walk you through it. The second is, there's a secret report that's not so secret. You just probably either didn't know you were getting it, you didn't know to ask for it, or the person who's doing your books didn't know that you would want it. And if you do your own books, you didn't know you can print it. But that is the general ledger. So the second video is getting the general ledger and how simple it is to dive into that and actually then understand the numbers that are on your cash basis financials. And in both those videos, I take briefly what's the difference between cash and accrual. I talk about the difference between AR and AP and the importance of knowing the difference and why it matters. I talk about from the perspective of understanding the one number that you're interested in on your P&L or anywhere on your financials, and then how to find it, and you'll see the detail in the general ledger. All I'm saying to you is you really should go check out those other 2 videos. But this third part is talking about now categorizing your expenses, okay, into 2 major categories. Now hold on, okay? I'm not at all saying you're gonna now look at a P&L and only have 2 expense categories. Not saying that at all. When you're looking at your expenses, you wanna know, here are my expenses to run my business, okay? That's your first category. So advertising, bank fees, credit card fees, copier expense, telephone, rent, etc., right? Those are expenses to run your business. Straight up, that's what it is. Any business owner, whether it's you or somebody else, is going to have these same expenses, right? The second major category, though, is what are the expenses that your business is paying that it wouldn't otherwise pay if it wasn't you as the owner. Now, what does that mean? If you didn't own your company and you were just an employee of it, okay, what are some of the things that your business is paying for that a business that you're just an employee of wouldn't pay? Give an example, right? Your car. You may have a corporate vehicle. Most likely, okay, it's not impossible, but most likely, if you worked for the business that you're in right now. So, let's say you're a barber. Let's say you're an attorney. Let's say that you have a dozer company, okay? If you were working for that company, they most likely wouldn't also pay you and pay your car payment, your insurance payment, your gas, your maintenance, your car washes. If they did, awesome, but all I'm saying is, what else is your business paying for? Then it can, okay? I'm not talking about a business that's paying personal expenses, okay? A business can pay a corporate vehicle. A business can pay for a cell phone for the owner. But that's that second category is, of your expenses, what are expenses that you should pluck out of categories and put it in a separate section of your P&L, so that when you're looking at the expenses, these are the expenses to run the business, okay? So I'm not gonna get into an argument with you, but you don't need a corporate vehicle most of the time to run your barbershop, to run your law practice, to be a dozer operator, okay? So I'm not gonna get into an argument of you whether or not you should have a car and is it necessary. All I'm getting is to you as an example here, okay? So if you were now to go through and say, you know what? I have my bank fees, I have my credit card fees, I have my advertising, right? But then you get down below and you go into telephone. You're like, well, this includes the office phone and it includes my cell phone, okay? This is not a time to get into an argument only with yourself on whether or not the cell phone should be in the telephone. I want you to really hear what I'm saying is you're trying to look at your financials in a way of what are the expenses necessary to run my business, not in a justification that your business should pay for it. Why are you arguing with yourself? Why? You don't need to argue with yourself. Your business can pay for whatever it is that you want it to pay for, okay? That may not lead to a tax deduction, but it can pay for whatever it is that you want. Wouldn't it be better, and the answer is yes, wouldn't it be better to look at a P&L and go, here are the expenses to run my business that are necessary, as in have to pay for them, okay? Do you have to pay for a car? I don't know. Do you have to pay for your own cell phone? I don't know. But to run the business, okay, of a barbershop, okay? Now, if you don't have an office phone, then yeah, you need your cell phone. But let's not get into the weeds here, okay? And I've been doing this long enough that I know you're already going in the weeds in your head. You need to stop it. I talk this way to my clients. The reason you need to stop it is that you're not seeing what I'm trying to do as an end result. Maybe it's because I'm not explaining it yet. And here's the end result. When you're looking at a P&L, you as a business owner, promise you, would rather see, okay, here's the income of my business. Here's my variable or cost of goods sold, right? So here's my gross profit. And of my gross profit, okay, what went to my overhead expenses, my fixed costs for my business. And then you have a net ordinary income, if I'm just going by descriptions like on QuickBooks. And then down below, you have other expenses, which you can have categories. You can have cell phone, car insurance, car payment, whatever it is, right? Lease payment, whatever, okay? And then you have net income. So what I want you to see is before your expenses, what is the net ordinary income before your expenses? I also put down there for the clients, their salary, right? The owner's salary, because that is subjective, right? An owner can say, I'm only going to pay myself 12 grand. An owner can say, I'm going to pay myself $600,000. It's subjective. Are you necessary to the business? Yes, but you're still missing the point if you're going to try and go, well, why would I put the owner's salary down there? And so when you're looking at your other expenses, okay, that in my mind is what we would call shareholder expenses or partner expenses or discretionary expenses, call it whatever you want. But these would be expenses that are being paid by the business that isn't necessary to actually run the business. Now, if none of this is making sense to you, that's cool. You don't have to do what I'm saying at all, right? It's just a free YouTube video for you. But for me, I do this. For every single one of my clients, I do this because now when they're looking at a P&L, it's like, okay, here's what my business brought. Here's my variable, my cost of goods sold. So here's my gross profit, right? Gross receipts minus fixed costs. Gross receipts minus variable costs, which is also known as cost of goods sold, arrives at this called gross profit. Talking about my book, I got other videos on it. So I am a gross profit, okay? Then what are the fixed expenses of my business, okay? And then what's my net ordinary income? Because now I know, here's what my business is netting. Now here's the key, and I'm glad you stayed with me until here. The key is this. This number actually tells you what you can pay yourself, what you are actually making out of the business. And this is where every single person that they look at is like, wow, my business is netting more than I thought. I mean, I've been looking at this and it's saying I net 25 grand. I'm like, gosh, I'm working so hard. I'm only netting 25 grand. Yeah, but when you look at it as, is it 25 grand after your car payment, 25 grand after your cell phone, 25 grand after what you pay yourself? Where if I were to help you with your financials and do this, you'd go, okay, here is my net ordinary income before anything to me, and holy smokes, it's 150 grand. And I'm paying myself a $75,000 salary. I'm paying this much for my car, this much for cell phone, this much for whatever. And yeah, okay, that's how I'm netting 25 grand. But before I paid myself, the net income of my business is 150, and you're like, wow, I'm making 150 grand, and you are. Because you've taken that 150 And you've decided to do payroll and all these other expenses. And you're like, wow, man, that's awesome. I'm netting 150. And now guess what? Your financials make a lot more sense to you. They're not scary to look at. They're exciting to look at. But then guess what else? You're also in a set of circumstances where you're able to look at it and go, okay, well, so if I want net ordinary income to be higher, are there any fixed expenses here that I don't need to pay for? Because I'm not at all saying you can't pay for your car through the business or you need to pay yourself less, or I'm not at all saying that your business shouldn't pay for the cell phone. I'm not saying any of those things at all. But now wouldn't it be better to go, here's my two major categories. I have my fixed expenses, and then I have what I'd call my discretionary expenses, or the expenses that I'm paying for that benefit me and or my family directly. Makes sense? So third part of this one is this aspect of breaking up your expenses, still having categories of the expenses, but breaking up your expenses to what's necessary for my business or fixed costs, whatever's a good terminology in your head, right? Here's expenses that my business has to pay to make it work. Maybe it includes your cell phone. You can't overthink it, okay? Because it's your numbers, it's your financials. And then down below, you have these other expenses to then arrive at your net income. And these financials now will be fully alive to you, and you'll have a better sense of what your business is netting. And I guarantee you'll feel better about your financials. You won't be like, man, I'm only netting 25. You're gonna be like, I'm netting 150 grand before I pay myself. And before I pay all these expenses, I'm feeling pretty good about that. And typically, for a lot of small business owners, if you're like me, you see a net like that, maybe it's discouraging to see 25, but then you see a net of 150, and you're like, man, let's go, you know? All right, so hey, this is a 3-video series, but I'm telling you this right now, I got a playlist. I've got a ton of other videos that are meant and designed to help the small business owner like me, like you. But this 3-part series, I hope you've enjoyed. Go back and watch the other 2 if you haven't already, are what are the most important things for a small business owner to look at related to their financials. Cash basis financials, looking at, tagged with that, the last 12 months of your P&L. Okay, go watch that first video. The second is you need to get a general ledger. That's the second video, okay? The general ledger, listen to that, how to look at it. You'll love it. You'll be excited. You'll be like, oh my gosh, these numbers came alive, and it's simple. Unless you don't know how to read, unless you don't understand numbers, when you watch that video, you're gonna get a hold of a general ledger. I walk you through what to do. It's not boring, okay? These are your numbers. It's exciting. This is about your business. And then what I talked about today. All right, hey, thanks for tuning in. I really appreciate it. I'd love it if you'd subscribe. Love it. And then don't you ever forget, you've never met a CPA quite like me.